Hey guys, what's going on? Paul here. Welcome back to another Cardano video. So in this one, we're going to look at a post that was put out by Ada Whale this morning, kind of talking about what whales actually do in Cardano and how they utilize the DeFi applications we have for making extra yield and potential strategies. So if you're on Twitter and you're part of the Cardano community, then you're probably very familiar with this account. Has a really good financial understanding. I think works in the banking sector himself, but is anonymous for now. If you're not following him, I will leave a link to the thread down below. I'm going to sit for this one due to a small bit of man flu today, but when I seen the thread, I thought I had to get the video out. So if you're new, subscribe, give the video a like, comment questions so I can include them in the current DeFi series, and I appreciate you watching. Let's jump into it. Okay, so here is the post that came out, and actually before we get into this, cannot do a crypto video today without looking at the massive run that is happening right now. You can see Bitcoin up to $61,000. I do have the video talking about the whole bull run and Cardano's place and where I personally think it is. Push that one out to get this DeFi one out, but that one will come out either later today or tomorrow, so make sure and subscribe for that one. Cardano ADA hitting 64 cents right now, so not too bad at all. Looking at the post then by Ada Whale, he splits his portfolio up. So anyone who watches the channel here for a while will know I talk about this too, that you should always look at your portfolio and split it up into different categories. So you have your safer options, you have your medium risk, your high risk, your degen, it all depends on the size of your portfolio too. Because as he says down below in this, that he does a lot of different things with his portfolio, and that is because he has a bigger portfolio, so he's able to allocate funds to different aspects, and it's still worthwhile doing that. But if you have smaller portfolios, then you pick smaller niches to get into and split your portfolio up like that. So cold storage, again, this is something that is very, very important. That is using something like a hardware wallet. You can see I have a Ledger here. I know the last few months, some people mightn't be the biggest fans of Ledger now. I've used them for a few years, but there are alternatives out there. Trezor and a few other hardware wallets that I need to look into because potentially I might change. But for now, Ledger still works fine for me. So he says here about having half his crypto assets, ADA and Bitcoin, in cold storage. So that means that half of his assets sit on a hardware wallet that he's not actively using in the market. So for me, I have cold storage and then kind of have extra cold storage. So I have a hardware wallet that I have some assets on that I'm not going to look at for 10, 15 years. And that's kind of my retirement plan. And I know people say, would you not try and time the market, sell the top, buy the bottom? But in reality, time in the market generally always beats trying to time the market. So that means the longer you're in the market and just holding, then there's a good chance you will end up in profit rather than trying to FOMO in and out of the market or chase the different pumps. I do have allocations for that, but that's why you split up your portfolio. So I have that's a way that isn't accessible on a day-to-day basis. Then I have another hardware wallet that holds other assets that I'm not actively trading in the market, and this is just for a safety procedure. So anything you're not actively trading, have it on a hardware wallet. It's very easy to transfer from the hardware wallet onto a hot wallet if you ever want to use it in the market. And that's another thing I would say is that if you're interacting with any new protocols or anything, have a wallet that you just transfer funds into and then use that for the protocol or whatever you're getting involved in. And when you're finished, take them out and put them back to either another hot wallet or into a hardware wallet. It just means that if you ever go to a malicious site and sign the wrong transaction, you're not going to lose all of your funds. There's a whole conversation about wallet drainers on Ethereum versus Cardano and if they're the same or if they're different, but at the end of the day, it is all just about security, keeping your funds as safe as possible. That's a conversation for another one. So when he breaks it down, then he says the other 50% of his portfolio is allocated to strategies, various holdings, sub-holdings across many, many wallets. Again, security-wise, you could have different wallets for different aspects of the protocol. If something happens, it doesn't completely cripple your portfolio. So he divides it into treasury, bonds, and strategies. So let's dive into each of these here. Treasury, he says about ADA, Bitcoin, and stablecoins is his treasury, and that is 50% of 50% of this portfolio, so that would be the strategies portfolio. So this is about 25% of the overall portfolio sits in this. And he says that here he keeps 75% ADA and 15% Bitcoin and 10% stables. These are dynamic targets that he works towards. So if one of them goes higher, he can sell it out and balance it out himself to always come back to in around them percentages. So he says since he mostly holds ADA and bonds and strategies, we'll get into them in a few minutes. That's across lending platforms and other options out there too. Then it probably works out to 85% ADA overall for that portfolio. So for the Bitcoin, he holds some of it via Anita BTC. So that is for bringing the Bitcoin onto Cardano. Some via OneChain. So again, bridging the Bitcoin onto Cardano. And then for stables, he uses Indigo IUSD. Personally, I haven't been storing much funds in IUSD due to the DPEG issues, but they are being worked on for V2. And I think once that happens, it becomes a lot safer option for me personally anyway to use something like IUSD, and there's lots of strategies there that we will get into in the overall series. OneChain then for USDC or USDT, there's opportunities on the likes of Liquid Finance for when you bring in your stables to, if we look at Liquid, you can see right now, if you provide USDT over on Liquid or USDC, you can earn over 20% yield on that. Now, they are bridged assets that you bring in and you're putting them into a smart contract. So again, this is why you wouldn't say, look, there's 20% yield here. Why wouldn't I take all of that? Then you do this in certain allocations within your portfolio just for the risk to reward ratio. So looking on then, you have ZED. So ZED right now is a lot healthier than it has been due to the rise in the price of ADA. And it's a lot better for both Shen and ZED holders with, I think the last time I looked, it was somewhere around 600% the collateral ratio. So there's opportunities with ZED when you have that, again, on some of the different DeFi protocols for providing ZED and earning extra rewards. I seen some of them earlier on, maybe Liquid Finance was it? Had one of the biggest ones. If we look here, supply APY. So yeah, over on Liquid or over on LendFi right now, this is V2. If you supplied ZED, you could actually, there's only a small amount here in the supply, but if you supplied it, then there is APYs of 15% right now for you providing the ZED for people to then borrow that out and use ADA as their collateral. Next up, we have Mint. So MyUSD. I've talked to the team and they're doing some really interesting things about cross-chain and helping to bring more stables and more interoperability to Cardano. So I'd say definitely take a look at them. It's another way to bring stablecoins into Cardano with MyUSD. So with USDT or USDC, I think at the minute it's just Tron. You can bring them across from Tron into Cardano and bring them in as MyUSD. And there's a few other things that's going to be coming out from that team too. Mehin still set to launch on the 16th of March from the latest I've seen in the last few days. Looks like it is going to be set to launch then. That one's going to unlock a lot of new opportunities for Cardano with fiat-backed stablecoins. The one thing I'm hoping that they can get some decent volume or some decent supply in there from early enough on, because that will really open up different opportunities. So then he says, as the markets move, target percentages get out of whack. So this is why he rebalances. This is what I said up above. So if Bitcoin outperforms, then he goes back in and reallocates to sell 5% to use that back into ADA or stables, and vice versa. If the other ones outperform, you can sell them back into the other assets too. And he keeps the ADA staked with a few different pools, always in search for good yields on stablecoins. So some of the things that we looked at there with the likes of Liquid or even over on LendFi, where there's opportunities for your stables. One other one actually there to throw in would be things like boosted yield over on Fluid tokens. So you could put in some of your ADA in here. What happens is you put in your ADA, you set the APR that you're willing to accept for someone else to lend that out. So then someone as a borrower could come in and say, I want to borrow. At the minute, there is 2.6 million ADA in here. Loads of different rates that people are expecting back for the ADA that they've put in. If there's one that you feel is fair, you can go in and you can pay the rewards on that to the user, and you can use their ADA then to get involved in staking. Sometimes ISPOs and things like that are popular with the likes of boosted stake. And I think Whale actually mentioned somewhere down here Optum bonds. So yeah, actually OptumFi bonds. So this is where you can use the bonds similar to that for Optum Finance. And Denogo is one I haven't personally used yet, but I have been looking into it, and you can actually trade the bonds there. When I talked to Mantis from LendFi, he talked about how you get the bond NFT when you take out loans on LendFi, and there's going to be opportunities for trading them bonds too. CherryLend, another lending and borrowing protocol on Cardano. This is peer-to-peer right now, and actually when Whale mentions LendFi here, what he's been using is the peer-to-peer bonds, which is this site here. So when you come in, you can see these are the current deposits, and then these are the liquidity requests. So if you were happy with some of these at the minute, there is this one here. So 50,000 ADA and a collateral of 50,000 LendFi is being put up. So for the 350 days, you could earn 8% on your ADA. So you lock your ADA into the smart contract, and then they can put up their LendFi as collateral against that. Since V1, V2 has launched, and I think there's a lot of opportunities going to come with pooled lending on LendFi V2. Some of the other opportunities, actually, he does mention fluid tokens and the bonds there with boosted stake, and they will be getting a lot deeper, I think, into lending and borrowing. Some updates coming there at the minute, and even LendFi, or not fluid tokens and Optum Finance, both are working on alternatives out there. Aquarium for fluid tokens. This video will go too long if I start getting into that type of thing, but there are things to look into. And with OptumFi looking at Leviathan or Levant, I can never pronounce that, the layer 2 they're looking at to really speed up DeFi on Cardano. And I'll try and sit down with the team fairly soon to have a chat about that. But I think them types of things will bring a lot more opportunities too. So he says here, if staking pays 3%, he's more than happy to lock in 5 to 12% yields on bonds and with appropriate collateral. So that means that when you get involved in any of these lending and borrowing protocols, that on the other side, people have put up collateral. So they have to over collateralize what they're putting up. And that means that if the price ever drops, the funds that you have put into these protocols to earn the higher yield is safe, because the collateral they've put up could be sold off to pay back what's owed to you. And did I actually miss? So Indigo, and I think further down he mentions butane. Let me see. Butane is mentioned somewhere. Oh yeah, further down the bottom. So I'll wait till I get to there to talk a bit more about synthetics and what you can do there. So that was strategies. Then you have stable 80 yield. We kind of put that in up above talking about it. So he says here about the steady return of 5 to 10%. At the minute, if you look at liquid, it's over 20%, but that is down to supply and demand. So if there's more people looking to take them out, they're willing to pay higher interest rates to the person providing on the other side. But if there's less people taking it out and more actually providing the stables, then you get a lower yield back. So keep an eye on that for how it moves with the market. And you can see here, this strategy likely to achieve a 25% year against ADA. And that is on, this is on the Levy Finance one. So Levy Finance is another lending and borrowing protocol. Been a bit more talk about them lately. So this is the NFT side. So if you have NFTs, you can put them up and unlock some of your collateral there. But on the tokens side, so recently it was announced they're going to have their own token. That's something completely different. But with lending and borrowing on Levy, it works a bit different in that there's set time periods. So you have 7 days, 14 days, or 28 days. And Will explains it a bit more here. So he says this is higher risk. So here he's also trying to find the best yields on stablecoins, as well as some native tokens that he likes to hold. He deploys a lot of capital into Levy Finance, which has really good yields, but higher probability of default. This strategy is more likely to achieve a return of 25% against ADA. And one of the reasons that you are more likely to have defaults there is so when you look at this here, there's higher yields, but there's also no liquidations on it. So if the price of the token you're accepting as collateral starts to fall, the protocol doesn't automatically liquidate it. So you do have a bit higher risk as a lender, but there is opportunities there for getting involved too. Next, token portfolio. So at any stage, he holds a variety of native tokens. So for anyone looking to get in, trading over and back is another way to make higher gains on your ADA rather than just holding ADA. And as the cycle goes on here, I think that's definitely a way of earning higher returns than just holding ADA. But it is that trying to time the market as well to get in and get out at the right times when protocols have upcoming releases or they have new features, or as they gain popularity, if tokens have a reason to actually hold them. If you look at the likes of MinSwap, and I'm not saying you should hold this, but they actually pay some of the protocol revenue back to MinSwap holders. Dex Hunter are looking to do something similar with the fee switch. So there's different protocols out there that there might be more reasons to hold tokens over other ones. And again, it still comes down to different times and supply and demand. And there's a lot of things to keep an eye on. So DEXs that he's mentioned here that you can trade on, all of the different current Cardano DEXs. And recently we have Axo and Gens have launched, and Axo is going to bring a lot more opportunities too. Then you have DEX aggregators like Dex Hunter, ADA Markets, and SteelSwap, where you can go in and rather than going to individual DEXs, you just go to one of them and then you get access to all of them. It will aggregate across them and find the best prices for you. So then yield farming pools, etc., when opportunities arise. This is one that I do a bit when a protocol launches first. I'm more likely to get involved in yield farming in terms of DEXs, but as the protocol gets a bit older, then I don't get involved as much, because when they launch first, the yields are higher, trying to encourage people to put liquidity into the DEX. In terms of an AMM DEX like MinSwap or Vi Finance, Spectrum, what's the rest of the AMM, so Wing Riders, they all provide their own token as extra rewards for you providing, I was going to say collateral, but providing the liquidity to the DEX. And as time goes on, then that does put sell pressure on the token. So that's something to keep an eye on if you're looking to buy into tokens too. But there's definitely opportunities in that. You just have the risk of impermanent loss. So again, this comes down to splitting up your portfolio into different allocations to have some that you're willing to put into this and look for the higher APYs. So this portfolio has very high volatility, but should be easy to outperform ADA over the long term. So yeah, definitely higher volatility, but in and out at the right time. Then these are portfolios that you need to be more actively watching on, maybe not just on a day-to-day basis, but definitely every week you need to be coming in and checking and seeing what's going on and deciding what you want to do with it. And then using things like stop losses or take profits, then that's always a good strategy to have. And I would say if you're doing either of them, a DCA, always talk about it here, getting into a token or getting out of it, DCA, you're never going to time the bottom, you're never going to time the top exactly. So start selling percentages. So DCA in 5 to 10% and keep dropping your limit orders, or getting out, you DCA out as well, selling 5-10% at a time, because you're never going to hit that one high price that you think it's going to go to. Set your prices below that and above that for selling. NFTs, definitely a tricky market to be involved in. One thing he does say here is he looks at ones that he can benefit from the NFT with utility. So he's named a few different projects there that have some utility behind the NFT. So it's not just artwork that you're hoping will appreciate in value. And then he has some of the blue chip projects there too. And then trading, JPEG, CSwap, Dropspot, or Jam on Bread are some of the options for trading. Market making LP, and this is where Axo and Genius come into it. So newly launched Axo and Genius, I will have tutorials on both coming out fairly soon, looking at how you can set up your market making strategies on both. With Axo, you have, it's massive what you can actually do there with programmable swaps and some of the opportunities. You can build all types of strategies. If you come from a Forex background where you've been using different strategies or building strategies over the years, then it's definitely something you will like, with the different types of strategies you can build there, from simple market maker box strategies, buy and sell within certain percentage ranges and things like that, or you can get a lot more complex on it. Genius Yield also have their market making bots, so you can set up your bot to get in and be a market maker, fairly easily be a market maker within the ecosystem. This is one that I need to do more research onto. So quantitative strategies, options, and perpetuals. So options, I've done some of my research on it, but never actually traded options myself. So you do have option flow as one that is live on Cardano right now. Axo is also going to be launching options. And then for perpetuals and derivatives trading, leverage trading, that's something I've been doing for years, but I have been using centralized options like Binance originally and then Bybit for the last while. So looking forward to having decentralized options for that too. I know Dex Hunter had a proposal in Catalyst the last time for that, but didn't get approved. There's others that are looking into it too. Axo potentially going to be looking at preps. So lots of opportunities. You look at what Jupiter have over on Solana and the amount of volume that's starting to really go through there and the opportunities that it brings. There is lots of possibilities. Future currencies, indexes, real world assets. So Butane, another synthetics protocol that's looking to launch on Cardano fairly soon, had a token sale recently, very successful one. And I'm looking forward to this coming out for the opportunities it's going to bring and pushing Indigo. So Indigo and Butane will push each other to give us, the end users, the best opportunities and protocols to use. This is where you can come in, you can use the assets you have to create a CDP, a collateralized debt position. So you put your ADA up. With Butane, I like that you can have multiple backings for one CDP. So you could put up multiple different assets, which does lower the risk of that position because you're not dependent on one asset and the price of that to keep your CDP okay, to keep your loan to value ratio okay, because with ones where you have one backing of it, if there's a big drop in the market, then potentially your CDP could be at risk of liquidation. But if you have multiple different assets in it, then you can be a bit safer on it. Obviously depends on the assets that are there, but on a high level with things like Indigo or Butane, you use the ADA you have. With Cardano as well, if you're using ADA, it's still staked, you're still earning your staking rewards. So you use that as the collateral backing. You mint your CDP, so the likes of IUSD or IBTC on Indigo, use that then in the market. You could use that to buy and sell other assets or potentially to leverage trade with some of the opportunities that are coming out or options trading. And there's a mix of opportunities you can have. This video is going a bit longer than planned, but hopefully there is some value there for you, and make sure to subscribe for the full DeFi series. There will be shorter videos than this one into the individual sections. Then you have real world assets. So tokenizing real world assets with Tiven and Finest Tokenize. I think they're the ones that are partnered with NMaker. And this will be tokenizing real world assets as well with synthetics. There will also be synthetics of real world options. Potentially you could have arbitrage opportunities between the tokenization of these and the actual synthetics. We'll wait and see where they come. Indexes, Miz and Matera. I don't know actually if either of them are live just yet. I'll have to check that after, but both are working on indexes for Cardano. So this is basically a portfolio that self-balances. So like Whale talks about up above, that if Bitcoin moves up or ADA moves up, then you reallocate some of the profits from that back into the other assets, and you do that manually. I know AxoTrade have also announced that they will be having indexes on their roadmap. So lots of opportunities coming out there too. Talks here about risk management. And to me, this comes down to, so he says the above works well for him, and it's probably also a function of more a sizable portfolio. So like we said at the beginning, if you have a smaller portfolio, you won't be able to do all of these opportunities, but you can decide where your risk tolerance is and decide what parts of it you want to implement yourself. And this here is very important. One key limit, I always adhere to this, is no more than 10% of all assets at any point in time across bonds, treasury strategies, exposed to any particular DeFi protocol. Because as much as we trust the different protocols that are out there, when you take funds out of your own cold storage and you get involved in any of the DeFi protocols, you are trusting the smart contract. So audits are a must. Audits can sometimes miss things, so there is always that small risk of something happening in the protocol, or even maybe not even a hack, something happens and something goes out of balance, or something just doesn't work the way it should. So that's why never have more than 10%. And I think that is really a good rule to have, that if something happened and you lost 10% of your portfolio, at least it doesn't completely kill where you are. You still have 90% to work with, and you can rebalance then and see where you go from that. I hope this video has been of some help, definitely longer than planned, but in the DeFi series that I'm doing, I'll be breaking down the individual parts of this into how you can do it, examples of it, and tutorials on how to use the different protocols on Cardano. Questions, suggestions, do leave them down below. I will leave a link to Whale's thread, and I'd say definitely go through his profile. There's a lot more you could learn from that. And Ada Whale, thanks for this and many of the other threads that you have put out. I'll talk to you soon. Make sure and subscribe.